As of now, these would be major trend lines, right? So again, talking about major versus minor first. Major is a line that is being continually respected time and time again. So you can see on Bitcoin here, over here, this orange line got hit here, 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 and here, right? So what this tells me as a technical trader is that this baseline at around 92,000 is a significant major support level. What it also tells me is that if it ever breaks, that would be where you would assume it would be a major breakdown. So
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway, the crypto ETF and market trends specialist, discusses smart investment strategies, market signals, and emerging opportunities in digital assets. Watch this video to uncover his insights and predictions.
Major trend lines, when you get a break of them, whether it's a breakout or a breakdown, those are major moves. Now, what makes a major trend line go to become a minor trend line? So if by chance you kind of come down like this and you trade a little bit below and then it recaptured, think about it like this. If you guys, we all know Swiss cheese, right? Swiss cheese with the holes in it. So essentially what happens when you chop through a trend line a lot of times and you come back above and then you come back below, the more you do that, the more holes, or essentially the more action can go through it, right? The weaker it becomes. And that's when you start to say, okay, hey, listen, this trend line broke here, but then it recaptured. That's the market. That's the charts telling you that it is now a minor level and should not be treated as such a significant trend line. Now, lastly, what I would just say is that at a certain point, you get a lot of action up, you get a lot of action down. At a certain point, you have to say, okay, it's too minor to really be of importance. And so really what you're looking for is you want to focus as a trader, and this is what I do. I focus on the major trend lines. Those are the ones that I know if they're broken, it should be a significant move in one direction or the other. And it's also the ones that will be major support where you can say until it's broken, expect bounces off this line, and then major resistance where if price goes up, you get a rejection right there. All right, hope that answers your question. Let's kick it back to Lawton for another one.
All right, next question comes from John Weinhofer. John asks, what screeners do you use to identify stocks that are in play?
That's a good question. So I'm going to give you guys my routine for in the mornings, right? So I wake up, I usually grab my phone off the side table, and I start to scan my watch list, which really compiles mostly the large caps. But in all fairness, I have Rigetti on there. I have, a lot of the things that have been very active as a technical trader, I always want to be keeping an eye on. Now, again, do I have micro caps or penny stocks? No, because again, I don't trade those. They tend to be thinner or less predictable. Now, as a technical trader, if a stock is getting pumped on Wall Street bets, it's more likely to essentially not adhere to the technical levels because it's being pumped and it's getting, pushed by an outside source. So what I want to do is I want to be aware of those type of stocks. Usually you kind of push them to the side. Now, Rigetti was this early on. That's why it had that incredible move to the upside. But essentially over time, it starts to adhere as it's not getting pumped as much to the technicals of the chart. So that can start to come back into play. All right, I throw on CNBC. Now, I don't turn on CNBC because I'm interested in what analysts they have on and their biases. I'm a technician, so I care about the charts. But what it does do is it shows me the ticker at the bottom of the screen that shows me big movers, right? If it has a lot of pre-market volume and it's up or down a lot, I'm like, oh, look, Disney today is down 8% on the day, or Nike's up 5% or something like that. That's abnormal to me. I also have a scanner that picks up the biggest gainers and the losers and also the most actives, all right? So again, I'm looking for NVIDIA that might be up or down 5%. That would be something I would trade, or a smaller stock that could be up 20, 30, 40% or down 20, 30, 40%, as long as it still fits usually a 5 billion to 10 billion at minimum market cap. So again, those are the basics of it. I don't use any kind of high-tech crazy screeners at this point to pull out things. We are working on an AI that will assist us in trading and give trade alerts out to us as well. That's coming. We have a beta version that we're testing at this point. But aside from that, I keep it simple. I want to know what's moving, what has volume and what's a mid to large cap trading opportunity, and then I go right to the charts and start analyzing them.
The crypto market is feeling the pinch. Investor caution is at an all-time high following a series of unsettling events that have shaken confidence. Total market capitalization has fallen by 2% to around $3.13 trillion, as digital assets face mounting pressure from several fronts. A significant trigger was the recent LIBOR memecoin scandal, when the token, promoted by a political figure, was abruptly pulled from circulation, leaving many investors with losses. This incident set off a chain reaction as liquidations across the market intensified, forcing many traders to exit leveraged positions. Solana experienced a sharp 9% drop, while major cryptocurrencies like Bitcoin and Ethereum also reported modest declines. Adding to the gloom, substantial outflows from crypto investment products have signaled that investors are shifting away from riskier assets. Recent data revealed that for the first time in 19 weeks, there were significant withdrawals totaling hundreds of millions of dollars, with Bitcoin shouldering a large part of these losses. Heightened fears over inflation and hawkish signals from the Federal Reserve have only compounded the situation, prompting traders to de-risk their portfolios. Technical indicators further underscore the downturn, with key support levels being tested and overall momentum weakening. While a rebound might be on the horizon if buying pressure resumes, for now the crypto market remains under heavy pressure, leaving many to wonder how long this bearish trend will last. It is a time of both fear and opportunity, with many investors hoping a positive turnaround emerges before the market dives.
The key is this, is that number one, you have to be very aware of your own financial risks and tolerances. And so you have to look at a trade. I mean, there's always ones where I look back and I'm like, man, if only I'd gone all in. But the problem is, if you go all in, it might be the one that doesn't work out. And I will be the first to say is that I have many trades that don't work out. I just happen to have many more that do. But there's always the one lurking. In fact, it was interesting. I was just saying this to my head trader out there, Ben, and Drew, one of my elite traders out there as well, is that so far in the Apex Live day trading room, I've batted 100% this month, right? So I don't know how many trades I've done, maybe 15 day trades this month or whatever it is. But I said to them, I said, guys, all right, I know my loser's coming. So you start to kind of be like, okay, this is not normal to have this type of streak. So one of these next probably few trades that I'll take won't work out. It's just because it's a probability game. It has nothing to do with me being great. The greatness is that I can bat 80% or better consistently. But again, 80% still leaves 2 trades out of every 10 that are going to go against me. So those are the first things. The second thing is always go on the conservative side. But what I like to do is I like to say, okay, is this a large cap stock? If it's a large cap, what's the biggest drawdown that I could expect in a crazy scenario? And then I calculated that in my brain and I say, okay, I have to figure out what share size where if I get that drawdown, I can still maneuver in that trade and I'm okay with. Because if you go too heavy, what ends up happening is emotion kicks in, right? So you see, let's say you go too heavy on even something like Apple, because again, you were sure it was going to be a winner. You picked it up. You were expecting to get $1 bounce on it as a trade. And instead it goes down $1. Instead of being able to maneuver, you're panicking and you're saying, oh my gosh, I'm down, 10,000 on this trade. I really only thought I would risk maybe 1,000. And here I am. You can stop out of it. But the point being is that your emotion takes over. And once emotion takes over as a trader, you're done. The market owns you. It literally will control you. So what I would say to you in terms of Ralph Lauren, in terms of that call, is start looking and saying, all right, look at the facts. What market cap was Ralph Lauren? How much was it down on the day? What was the potential drawdown or pop that I could have experienced in the opposite direction? And start to kind of formulate a thesis for why or what share size would be appropriate, also taking into account your risk tolerance, right? So what's your drawdown where you start to panic? Is it just $500 of a loss or is it 1,000? And notice how I'm focusing on the loss here. I'm not focusing on the gain. The gain will come. If you're an 80% trader, gains will come. It's not getting yourself into a position where the emotion takes over. And I always would rather err on the side of caution and win 80% of the time by betting less, but just being consistent versus getting in all in. And then one of those, losses ultimately wipes out a 10 months or 6 months of my gain.
Michael Saylor, co-founder and executive chairman of Bitcoin-focused company Strategy, responded to Elon Musk's provocative tweet questioning Fort Knox's gold reserves. Musk, known for his unconventional commentary, hinted that the gold in Fort Knox might not be secure, even suggesting it could have been stolen. His tweet, laced with skepticism, came as he expressed concerns about the lack of transparency in auditing the U.S. national gold storage. This bold statement has stirred debate, especially as Musk's words were paired with a meme showing an empty Fort Knox. Saylor wasted no time firing back with his signature remark, "Bitcoin fixes this." With this statement, he implied that Bitcoin, with its decentralized and transparent nature, offers a more reliable alternative to traditional assets like gold. His comment reflected his long-standing belief in Bitcoin's potential, while adding fuel to the ongoing discussion about the future of money. As debates heat up, the crypto community ponders whether a shift from physical gold to digital assets is on the horizon if influential figures continue challenging the status quo. The exchange between these tech titans has captured the imagination of many. This brief exchange has sparked a lively discussion on social media among investors and critics. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.